Hello all and welcome to our Fireside Chat series, Emerging Markets Reimagined, Quality, Diversity and New Opportunities with Mawer Investment Management. I'm David Braham, Senior Executive Director of Thought Leadership and Market Intelligence at Institutional Investor. Joining me today is Rob Campbell, Board Director and Institutional Portfolio Manager at Mawer Investment Management. Rob, thank you so much for joining us.
Thanks for having me.
Rob, there's a lot to cover today, so let's jump in. Many investors, analysts and commentators still view emerging markets through a very stereotypical and skeptical lens, one that hasn't changed much since the 1970s and 80s. But emerging markets today look very different to those 30, 40 years ago. What does the reality actually look like in 2026?
Well, yeah, I think that's exactly right. There's this caricature that emerging markets are a collection of low-income economies with recurring political crises, very heavy-handed governments, lower quality management teams, and if we're honest, returns that really haven't lived up to the hype over the last 20 years. And so I think that picture isn't entirely wrong. But if you look company by company or jurisdiction by jurisdiction across the entire universe, I think you'll see that the picture is materially incomplete because we have seen a pretty massive structural shift. But let's start those 30 odd years ago. And I'm thinking specifically of the mid-90s. You did indeed have this rolling set of crises, whether it was with the Mexican peso in 1994, you had the Asian financial crisis, of course, of 97, the Russian default crisis of 98. And so at that time, the landscape was riddled with crises and mainly focused on Latin American companies, many of which were commodities or commodity businesses, with Asia a lot more at the periphery. And if you've read Bill Browder's Red Notice, you'll know that being an investor in emerging markets at that time required real nerve. Of course, since then, we've seen China's entry to the World Trade Organization back in 2001. That really accelerated its integration into global trade and supply chains. Of course, along with China, we had the rest of the BRICS, Brazil, Russia, and India, which supported a very powerful commodity supercycle throughout the 2000s, which perhaps reinforced this notion that the emerging markets universe was still very much about resource exports and investment-heavy growth models. And so fast forward to today, in the landscape today, there's been a much greater shift. Asian markets such as Taiwan and South Korea, India have really gained prominence, less through commodities, but more through technology and electronics, through services. Many of these countries developed a lot stronger monetary policy frameworks. They adopted flexible exchange rates, local currency bond markets. And from a sector perspective, if energy and materials really dominated emerging markets 20 or 30 years ago, technology and consumer-oriented sectors are a lot more important today. In effect, David, they've swapped. So commodities used to be about 40% of the MSCI EM or Emerging Markets Index 20 years ago. Today, it's closer to 10, and technology has done the exact reverse, gone from about 10% up to 40%. Now, I think it's worth noting that geopolitical shocks, such as the recent outbreak of war in the Middle East, just goes to show that this progress hasn't been and shouldn't be expected to be linear in nature, and that real risks do indeed have the ability and potential to reprice assets fairly quickly. Emerging markets isn't, they're very different. It's a very heterogeneous space. But when we think back through that evolution, there are a couple of key questions that I think investors should really think about. The first is, well, why haven't valuations in emerging markets reflected a shift towards a higher quality universe? So just put simply, if we moved from shovels to servers, businesses that tended to be a lot lower return on invested capital, a lot more capital intensive, to those that are a lot more scalable, where you can get those high returns on capital, how come we haven't seen that reflected in the market? Because despite the fact that emerging markets have shown pretty strong performance over the last, call it year and a bit, the price to earnings ratio for the index is approximately where it was 20 years ago. And so with that real structural shift in the composition of the landscape, might this present a real opportunity? And then the second question that I'll leave you with is, okay, with that shift, Does that change the way investors should think about correlations and the role and the composition of emerging markets in their portfolios? And David, I think the answer to that last question is very much worth pondering. And there's probably a different answer depending on where you sit in the world.
Rob, thank you very much for that great overview. I was going to follow up by asking, you mentioned Bill Browder, I'm going to mention Jim O'Neill and the invention of the BRICS report 20 plus years ago. How much has that changed the way we think, particularly in New York or in Toronto or in London, about EM investing in general?
Well, I think some of these other structural shifts have just become that much more important. And this isn't to minimize the impact and the importance of an economy such as China or India in the emerging markets landscape. Certainly they are. But one of my own personal pet peeves is just those two countries swallow so much of the attention that they're in the conversation around emerging markets. There's so much more to emerging markets than China and India, or if you extend it to the broader BRICS. And I think for those allocating in the space, one of our recommendations, and we'll hear about this a little bit later, is just how important it is to really harness the full breadth of the opportunity set.
Rob, I think that message is wonderful, the depth and breadth of emerging market investing today. So thank you very much, and thank you all for watching. Make sure you tune in for the next installment of our Fireside Chat series, Emerging Markets Reimagined, Quality, Diversity, and New Opportunities with Mawer Investment Management. Take care.